We're now going to be talking about the mother of all IPOs. It has happened with the DPM secretary also announcing it on Twitter that the DRHP for LIC IPO has been filed. The mother of all IPOs, the government hoping to raise 65 to 70,000 crore rupees by diluting 5%. You're talking about 31 plus crore shares that will be on offer. This is all via offer for sale and no fresh issue component. We're going to be discussing the LIC IPO, the mother of all IPOs, with Digant Haria, the co-founder of GreenEdge Wealth, joining us here on the market. Good morning. You can never time the market. I don't know if this is the kind of market the government would have wanted for the country's largest ever IPO, but just with the kind of information that is out there on the DRHP, the kind of numbers that we're talking about, the roadshows which had already begun earlier, what's your sense?
Yeah, hi. Thanks, Nanda. Thanks for having me on ET now. Yeah, see, as you rightly said, it's the largest IPO, and more than that, see, it's the largest company. It's the only insurance company which has survived for 60 years. So, it has customers who have paid money for many years and even got back their money. And, through generations, people have done investments in these products. So yes, there is a lot of excitement in terms of, how big can this be? And yeah, I think insurance in India, we have always said it's an underpenetrated sector and it can grow at 15% CAGR. But honestly, the analyst in me says that okay, LIC is a public sector entity. So however great, however large it is, there will be a lot of new things which we will come to know in the coming days, because see, a public sector entity which is not listed, there will be a lot of there will be a pretty high standards through which the stock market is going to put that company through, and whether this company can sail through the high standards, that is what will determine how much value will LIC get in its IPO and how much value can it create further for its shareholders. So these are just my opening remarks. We can discuss further as things go.
Of course, so what we do, of course, have is the embedded value, right? That has been declared by LIC, more than 5 lakh crore rupees. It's talked about a 60% plus market share, the largest insurer in the country, But a lot of it is going to have to come down to pricing, Digant.
Yes, absolutely. See, as you said, it is the largest and everything is fine. We all know all that, right? We all have our relatives, a lot of other people who have made their careers out of selling the insurance policies. And for Indians, it has been the savings option of the last, Indians don't like to pay money and never get it back. So in India, insurance is more of a savings product rather than anything else. So see now, coming back to valuation and coming back to the pricing, see the embedded value of LIC has gone up 10 times in last 6 months. Okay, so just to give you the sense that embedded value has gone up from 49,000 crores to almost 5,38,000 crores. Now, such a sharp rise in embedded value, it's very difficult to say how this value went up so much, except for the fact that there is an IPO that the government has to do. Second thing, see, what we have to understand is insurance is a very, very long life product. So if I am selling a policy today, there are two questions which I need to answer. That am I pricing my product correct? What if the person is going to live much longer than what I have assumed? And second is, what are going to be the interest rates? Because in India, I am promising an insurance buyer some kind of protection for his life and some kind of investment returns both. And LIC is just, 99% of LIC's products are in this category, right? There is no linkage to the stock market. There is no ULIP-like product. So I just think that, if you take last 3 years, LIC has hardly reported any profit. So the profit of LIC would be what, 2,500 crores. It's even less than SBI Life, which is say 1/8, which is maybe 1/8 the size of LIC. So LIC is the largest insurance company, and SBI Life is the second largest insurance company. So, but profits are very, very different. So what I think is that because LIC has to get ready for the market IPO, it has to do all these actuarial valuations, which we can talk about as, the mortality rates, the interest rate assumptions, everything will be checked. And because of that, I think, LIC has had a significant hit on its financials in the last 2-3 years. We'll have to see, how all the large fund managers of the world and in India, uh, you know, accept these financial statements which government has published. But apart from that, yes, it's definitely a great story in the sense, no other country has the largest life insurer which has more than 25% market share. In India, LIC has 66% market share. So there are a lot of positives here, but valuation is one. So it's not as simple as that. Okay, SBI Life is valued at 3 times embedded value, so I will assign 3 times embedded value to LIC. No, it's not that straightforward. My assumption is market will value LIC anywhere between 1 to 2 times of the embedded value, which will be between 5 lakh to 10 lakh crore market cap. The news which floats around is that 5% stake sale will happen for 65,000 crores and LIC will get 3.5 times embedded value. I really doubt that because we don't have those financial numbers to give comfort, number one. And number two is, see, LIC is losing market share to private sector every year. So, in individual segment, they have lost around 600 bips of market share in last 6 years. And second is they don't have market linked products. And if you see the boom in the stock market has come out of all these young guys coming and opening account on, Zerodhas and Angels of the world, doing it yourself, having stock market linked products. LIC does not have ULIPs, which are the stock market linked products. They just launch a few products in 2020, but that's like less than 1% of the market share. So the long-term value for LIC, we need to see how it evolves. So there are 2 or 3 spaces where LIC has to work. One is to give comfort on its numbers. Second is to digitize and modernize. And third is to give products which are really relevant to the youth of India.
Okay.
So yes, I think we should not get too excited and value it at par with an HDFC Life or an SBI Life. But I think it will still be a great company, and a company which can be valued between 5 lakh to 10 lakh crores.
5 lakh to 10 lakh crore is a very large number. We'll talk about it with you when we get a sense on the pricing. But my next question is perhaps slightly technical in nature and just my personal thought. It just occurred to my mind. Government is looking at selling 5% stake, which means 95% of the ownership of LIC will be locked up with government. Now, LIC, a brand, could prompt a lot of big investors and large investors to invest in LIC, the share pull of the brand. So what are the chances that because of this entire low float or little float and institutional ownership, you could actually see mispricing of the stock when it lists?
I think, see, Nikunj, the thing is that, even 5%, if let's say, it settled, I am thinking 5 lakh to 10 lakh crores, let's say it settles at 10 lakh crores, and 5% of that will still be like, a reasonable float, it would be around 20,000 crores. And see, at the end of the day, I think a lot of large investors will be reasonably rational. And we have seen in all government IPOs in the past that eventually they have to go down to 75. So there will be this fear of OFS, which will, constantly lurk, that over a period of time, you have to get it down to 75. So everybody will know that, okay, there is going to be a lot of supply which will come. And like 25% of 10 lakh crores will be 2,50,000 crores of supply. And see, most of the government companies, LIC has subscribed. I don't think LIC can subscribe to its own IPO, right? So it has to be all the private investors which will have to value the stock and apply. So I agree that there has to be an excitement, there has to be a premium to this company, but let's not forget that it's a PSU losing its market share. Technologically, it is far behind a lot of the private players, and they have to modernize in terms of product offerings. So maybe I would want to compare LIC with an SBI, that though it's a public sector entity, it is a very formidable public sector entity and probably better than a lot of other public sector entities. So, the best among the lot. So LIC would surely fit there. A lot of excitement, at the right price, we all should be excited about it. But yes, let's just not give it the multiple of SBI today itself, because the SBI itself went through a 6-7 year of cleanup in their loan book, improvement in their technology, improvement in their product portfolio. I think LIC will go through that cycle for the next 3 to 5 years, as market scrutiny will improve the governance, transparency, and the
Fair point. So, a follow-up question would be, while for government this may not be the best time to take LIC public, it's in compulsion. You got to meet your numbers before 31st of March. Markets are down, and more importantly, the last couple of months because of COVID for insurance sector has been bad, whether it is life or general. They've not been able to take the entire premium charges higher. So for an investor, do you think it's time to do rear view driving? Now, whether it is an LIC or SBI Life or HDFC Life, if you buy into insurance stocks at this curve, where because of COVID, numbers were compressed, and next 2 to 3 years, the uptrend in the cycle could be beneficial. Could that be an underlying thought? Now, whether it's LIC or other stock, that's debatable. But in general, insurance sector has gone through an unusual amount of stress, which is not going to come back.
Yes, very true. See, insurance, the penetration driven growth is more or less done. I think, more than 22 crore families have insurance policies. So that is not a big theme, but, the amount per person in India is paltry. Like, as we become affluent, as we become rich, as the per capita incomes go up, this is going to be a very big story. So insurance has seen a valuation correction. We have already seen 30-40% correction in the valuation over last 2-3 years, and growth has suffered because of COVID, mostly because of COVID, but more because the boom has been in the stock markets, and even mutual fund industry has seen slightly lower inflows. So I was just listening to your your comments before my interview that we have now reaching a stage where the euphoria is over. Markets is taking a pause, and maybe there will be a change in flavor in the markets. So in that context, I think these kind of products can actually make a very big comeback. So the macro setup is brilliant for insurance companies to do well in the next 2-3 years. And see, when interest rates rise, companies like LIC will see very good numbers because they have a lot of fixed rate products, and on higher interest rate, though their long-term liability assumptions will actually change. And what has happened in the last 3 years for LIC, some of it can actually reverse. And maybe last 3 years were tough for those liability valuations of LIC also, and maybe which is why government is in a rush to do an IPO, so that government does not have to put additional money.
All right, Digant, it's been a pleasure interacting with you. Thanks very much for putting things into perspective when it comes to LIC. All said and done, it's going to be a huge catalyst and trigger a lot of excitement in the market.